Welcome to the Stock Market Daily News Podcast. Today is January 13th, 2026. Let's get you caught up on everything that mattered on Wall Street yesterday. The major indexes saw a mix of cautious optimism as investors braced for the start of earnings season. The S&P 500 closed little changed, holding near recent highs. The Dow Jones slipped slightly, while the Nasdaq edged up, supported by renewed strength in tech. The big story? Major utility companies surged as they inked massive, long-term power deals with tech giants eager to fuel their data centers and AI ambitions. We'll unpack that, plus the coming earnings wave, and what might be catching markets off guard. Let's dive into the top headlines moving markets. First up, earnings season kicked off with all eyes on the big banks. JPMorgan, Bank of America, Citi, Goldman Sachs, and Morgan Stanley are set to report throughout the week. This round of earnings matters not just for their numbers, but for what they reveal about the health of the U.S. economy, consumer demand, and potential credit risks. After a choppy first half of last year, bank stocks rallied to record highs by December, riding optimism over AI and corporate deal-making. Investors are listening closely for signals on whether that momentum can continue into 2026 and how policy headlines from Washington, like President Trump's affordability push, could shake up the sector. Next, utilities grabbed the spotlight as once sleepy dividend names struck multi-billion-dollar supply deals with the world's biggest tech players. Brookfield Renewable signed a huge 10.5 gigawatt framework deal with Microsoft, and Google expanded its hydropower partnership. Constellation Energy locked in 20-year agreements with both Microsoft and Meta, totaling over 1,000 megawatts of nuclear output. These deals sent utility shares higher. Constellation touched $428, up more than 2%, reflecting growing investor interest in stable, income-generating stocks tied to the AI infrastructure boom. Dominion Energy soared after revealing requests to supply nearly 50 gigawatts to Virginia data centers, part of a planned $50 billion in capital investments through 2029. The stock closed above $54, advancing over 1.5%. Investors are betting utilities are becoming strategic partners for tech, offering steady demand and long-term growth, plus solid dividends like Dominion's 4.6% yield. Switching to policy risk, President Trump rattled markets by signaling increased scrutiny of corporate affordability, especially in sectors such as defense and big investors in residential real estate. Although details remain scarce, his comments were strong enough to trigger sector rotation as investors weigh exposure to targeted industries. It's a reminder that political headlines can spark rapid market shifts even when specifics are vague. Finally, looking ahead, all eyes remain on corporate guidance from this week's earnings and what signals emerging data center energy deals send about the next phase of the AI race. Investors should stay alert for updates from Davos next week and tune in for any new policy details out of Washington. To recap, the S&P 500 was flat, the Dow slipped, and the Nasdaq climbed modestly. Utilities and tech-linked names outperformed, while bank earnings and policy risk stayed front and center. The big themes? The intersection of AI infrastructure and utilities, heightened earnings sensitivity, and rising policy scrutiny. That's your market roundup for Monday, January 13th. Thanks for tuning in to the Stock Market Daily News Podcast. Don't miss tomorrow's episode, subscribe, follow, and get all the crucial market insights every day.